what makes CBDC such an important milestone in the economic and financial system as a whole? I would like to ask Dr. Chakraborty first.
There are key impact of CBDCs in the economy, which should also be seen more in a brighter sense. Now, once we have this CBDC in economy, there are a lot of things will be changing. One of them is that what will be the design of the CBDC? So the CBDC will be token based or it will be central bank account. So that's one thing has to be taken, and it will change, or it will be decided by each central bank based on their local jurisdiction. So nobody can push for that. Although IMF give a lot of guidance on this to various central banks, but central bank has to take their own call that what type of model it will be there. That's the first thing which has to be taken into consideration. Second one is that CBDC, when it comes into picture, whether it will be interest bearing or there will be no interest on it. That is also a very big question from a designing perspective, because if you make it zero interest, then what will happen? And if it's, let's say, for a central bank account, then there can be a lot of money or cash which can fly from, there'll be no interest on it. So there'll be absolutely zero interest for that. Second thing is that if you make it an interest bearing instrument, then there can be a lot of capital cash flight from commercial bank to these assets, and that can impact the commercial bank's deposit. So you need to decide very carefully what will be the interest bearing for it. But from a monetary policy, again, if you put it as an interest, some part of interest on it, it can be a useful thing because, as you know, we have something called term structure or yield curve in any financial market or fixed income market, where we have interest for different tenure. But now if CBDC, as Arshdeep also said, and even I was saying, that if it is a direct replacement of a cash, then it will obviously sit at a very lower end of the curve, very lower, maybe and lower than the one-day repo also. So that can be a good monetary policy instrument, CBDC, if there's an interest bearing on it. And based on it, they can decide the term structure, how it will look like. So central bank would love to have some interest bearing on this type of asset. So that's one of the impact which will happen. But the central bank has to take a call. Each jurisdiction is thinking a different way, that whether it should be zero or it should have some interest on it. Second thing is that once you have CBDCs as a milestone, the regulations will change drastically. There will be a lot of regulations, differences will come, whether in terms of payment, in terms of cross-border payments. So a lot of regulations will be in place, which will be changing. Third one is very important, which is becoming a challenge sometime in a big economy, is the technology. Now, a central bank decide a certain amount of CBDC in a certain technology format. Now, in any economy, we have different types of banks. Some are very high-tech banks with a very high capital base, and some are small banks where it doesn't have much of a technology. So they find it difficult for getting those CBDCs in their own platform if that's required. So uniformity of technology among banks will be another thing which has to be taken into consideration. That is another impact, and which is a cost is there. So that can impact the capital of the banks also. So we need to be very careful on that perspective, that how CBDC's technology will be there. And if it's very expensive, then the small banks can be ruled out of the CBDC, which is not permissible, because if you're coming out with a central bank currency, all banks should participate in that. Third, sorry, I lost the count, third or fourth, whatever factors I'm talking about, is the cyber security. Then another issue, because if you're coming with a CBDC, you need to be very careful on the cyber security part, because that should not be hacked by any of us, and that's why the guidelines and the robustness of the technology should be taken into consideration. Financial reporting will also change, because CBDC will be a new asset, so there will be a lot of impact on financial reporting. But the most important factors, which I believe, which all economy will be talking about, is that when you come out with CBDC, or when you come out with private cryptocurrencies, which you have seen that there's a dearth of talent to manage this thing, the knowledge base. And I think that's another area which I think which can hamper various countries. So there, I think people like you can play a major role, because knowledge, you have to enhance the knowledge base of such assets. So whether you're talking about private cryptocurrencies or you're talking about CBDCs, central bank can come out with the rules and regulations. But if there's people who don't understand that, then those assets will never be successful. So that's the one other challenge which I keep on repeating in various platforms, is that if you're coming out with a new asset, you need to enhance the talent in those jurisdictions. So these are the few major points which I wanted to highlight, which will be there once you have a CBDCs, and we need to overcome those issues. Some of them are issues, some of them are challenges, some of them are benefits, but we need to talk about that in various platforms.
My next question goes to Mr. Jindal. How can technology enhance CBDC and help its wider adoption in the banking system? Can the government play any vital role in this?
Absolutely. I think governments will play a very important role in fostering the right ecosystem, which could build applications, which could take a CBDC from its introduction into the economy to its wide adoption. So the introductions of CBDCs is going to be a very important milestone in the continuing development of the economic and financial system. And they have the potential to act as an accelerant in this march to a digital economy, which every government is sort of on right now. And what will really set a government apart is their will to implement these CBDCs in a proper manner, to foster the right environment, the right digital environment, the entrepreneurial environment in their respective economies, which will then result in this. The digital economy that will result should be rooted in safe and secure transactions, which consumers can then participate in with full confidence. So that is going to be a very, very key area which will need to be focused on. The other part that technology can play a very important role is in the data element. So with CBDCs, what is going to happen is that there is going to be transaction by transaction tracking at the central bank level, only for the eyes of the central bank, of course. There's going to be tracking of transactions. There's going to be a full flow of the currency through the economy being looked at. And what that means for policymakers especially is that they get this rich treasure trove of data. And this data will have to be mined. There will have to be techniques of machine learning to be applied on this data, therefore to identify trends and to hopefully predict any shocks or any trends or that might be coming in the future, that might be looming for the economy, which the central bank can then create better policy to mitigate. So the introduction of CBDCs will have to be complemented with a very, very strong push by governments in this area, in training up the right people in the areas of data mining, in the areas of crypto security, and in the areas of applications, because the full benefit of CBDCs will only be realized when the applications built to utilize them are accessible to everyone in the economy. What is so good about cash? Cash is simple. Cash is accessible. It is accessible to the last person in the economy. And that is what makes cash so important. And what is going to increase the adoption of CBDCs is a mirroring of that simplicity in the applications that are built to use CBDCs, which should be usable. You'll have to build applications in every language, which are accessible to people who can utilize those applications to use the digital currencies to make payments on a retail basis. So for me, I think governments play a very important role. They play a very important role of facilitation. And once they have done that, once they've built the right environment, I think the market will definitely take over and allow for a wide adoption of the CBDCs here.
How does machine learning and big data help in policy formulation of CBDC?
We are seeing that in various central banks. What happens when we have a monetary policy? We get data, but the frequency of the data is, let's say, monthly data, or maybe sometime a daily data, or maybe quarterly data. maybe half-yearly data. So the frequencies are not so quick. But once we have CBDCs, and as Arshdeep rightly pointed out, that the central bank will be tracking those transaction to transactions, maybe minute to minute basis, and if it's a very vibrant economy, the frequency of data will be enhanced like anything. And there the concept of big data comes in along with the machine learning in monetary policies and and fiscal policies to some extent, more into monetary policies. So that type of talent will be recruited by central banks in due course of time, who can use these things, policy data, based on that data, forecast the future interest rates, and that input goes to the monetary policies. And I believe then the monetary policies will be much more stronger, and it can be easily implementable. And the gestation period or the lag period from the success of the policies to measure the success of the policies will be much more shorter there. So machine learning and the big data or any data analysis will be very important part of the policy making now, I think, once the CBDC comes into picture.
As you aptly highlighted the role of technology in policy formulation of CBDC, Dr. Chakraborty, my question to you is, what is the level of preparedness of the central banking system?
I think the central banks have realized that technology-related risks are very important, and that needs to be minimized. So let's, for example, I'll tell you, give an example on this part. We have something called cloud-based computing, and which many of the banks use that for their various operations. First of all, they said it cannot be used. Then the regulation has changed, and then it has been said that you can use it, but the cloud should be based in that particular jurisdiction where this central bank can regulate. Now, the question is that if I keep a cloud, let's, for example, in a small economy, why should I go for a cloud base? Because I want to reduce my operational cost. Now, if I have to keep that cloud-based on entire thing in a particular jurisdiction, my cost does not go down. But if it is, let's say, for example, for Southern Africa, if the entire cloud-based computing is done from South Africa, then the cost of other countries will go down because there will be economies of scale. But that central banks initially didn't allow, and that's why the cloud-based computing thing was not going up. But now central bank have realized in the last few years, and they have changed the regulation. They said you can use cloud-based computing for various banking operation. But what central bank needs? Central bank needs two things: that whenever is required, they should be able to audit this cloud process. And second thing, if something goes wrong, the liability should be with the board of directors of the bank. So which makes sense. And then the banks have started using it. So why I gave this example? Because central banks' attitudes towards the technology risk is changing. They have realized this is very important and people has to hedge it properly. So now when this regulation came into picture that you can use cloud-based computing, the other regulations came that you need to do a lot of operational risk management, which includes technology risk management, and those guidelines are already in place in the most of the advanced central banks, as well as not so advanced central banks are looking forward it and you'll see that in next 6-7 months those type of regulations will be there. So now coming to your question that how ready the central banks are about the risk related to CBDCs, they have realized that because CBDCs is a digital product, so it will have all the risk which any of the other technology products will have. And that's why they are coming out with various new regulations to which the banks and as well as themselves, they have to follow to hedge this type of risk. So you'll see a risk-based supervision, which is to be done. That includes now technology risk. You'll see cloud-based services, which requires to be followed by a commercial bank that also has got a lot of technology risk guidelines. So I think to answer your question, central bank has realized and they have started working on it. The problem comes here is, as I said in my earlier point, is that central bank can give the guidelines, but to implement those guidelines, you require various technological products. And that's very expensive. And some of the small banks may find it difficult to implement that. And that's why I was trying to make that point, is that in a big economy, big banks can manage to do this, but the small banks will find it difficult to implement such type of products to manage those guidelines. And that can create problem for the small banks. So that dichotomy should not be there as far as the technical usage is there. So we need to come out with technology which can be cheaper and can be utilized by various people. So that's the point I want to bring it. But to answer your question in one word, central banks are gearing up to manage their technology risk in a big way.